It is day 3, the final session, and it is about 11:15 here on the Great British Pound Swiss franc chart. We got our EMA and Parabolic stop and reverse pulled up as always, and these indicators have been giving some very sketchy signals. If we'd started trading before 10 to 10 there, look at this, we'd get in a buy signal after the first dot closed, so we'd be in right up there, only for it to reverse into this dot. After that one closed, would we have been in a sell trade there? Let's zoom in once more. Yeah, we do see it. We do see the EMA there just about going back down, so we would have been in a sell trade for that one. And then back into this buy trade here as the EMA turns up and the dots go under. So that would have been around about there. Immediately back down, and then we would have been in this sell trade here, which at the moment we would have been down a little bit. Who knows where that's going to go? But it would have been 3 losing trades within 6 periods there, and currently 1 in a losing state as well. Really choppy, not sure what's caused that volatility there. And this is sometimes where the 5-minute chart could really do you over, or the 1-minute chart would be even worse for this. It'd be awful. If you think you could have navigated this to make some profits with, say, this buy trade and get some from this sell trade as well, I would be very interested to hear about that. At the moment, the trend is fully down with those. We've got the dots going down and also the average as well. As per usual, either need for both of them to turn to give us a signal to get into a buy trade, or for one of them to turn and then turn back. As long as they match up outside of the first trend of the session, then we are in. Here's our economic calendar for the day. Not much been going on so far, a little bit of numbers, trade balance and construction work out of New Zealand and Australia respectively. Ahead for the day, again, nothing at all for the pound Swiss franc currency pairing. 11:30 for the euro coming out of Germany. We've got the Institute for Economic Research. It's their business expectations done on a whole bunch of monthly reports, basically. They give it out to all sectors to see whether things are going good or bad within the current business climate. And that all feeds back into a score here. As you can see, forecast around about 100. They are getting just above those numbers at the moment on the previous. At the height of the pandemic, they got as low as about 75 or 80, just to give you an idea of the range. It is seen as pretty relevant to the current business conditions and climate, but whether it has any impact on the Great British Pound Swiss franc, unlikely, I would say. We'll watch for it still, though, just under 40 minutes until that. At the same time, the European Central Bank Vice President de Guindos will be making a speech. Unlikely to cause volatility, but maybe we'll check it out. 3:30 though, US durable goods. That could have a knock-on effect. Durable good orders month on month and core durable good orders as well. Certainly more likely to have an impact than the Mexican GDP or Brazilian mid-month CPI. If we do get knocked out of a trade because of increased volatility at 3:30, then we know exactly why. It's not going to change what we do within the system, but I think it's good to see this stuff. You can see what does have an impact on the currency pairings and then adjust your strategy accordingly. And sometimes you can say, hey, if a trade signal comes at 3:25, I'm not going to take it because I think that volatility is going to increase and it's just going to swing the EMA. It's going to knock me out. And 5:30 on a Wednesday, it is standard, the USA oil stocks. Very unlikely to hit the British pound Swiss franc, but maybe we'll see the numbers come through. Depends if we're still trying to claw some money back from all the losses we've had so far. So no direct impact from the economic calendar onto us today, but we will be checking out that German Institute for Economic Research, their business expectations reports, and also the durable goods orders at 3:30 on the US dollar. Seeing some green candles coming now, and the EMA is tilted upwards. So if price carries on up and knocks that parabolic dot down underneath, that will be an entry signal for us at the close of that dot. Right now, though, price just coming back a little bit. Let's see where it goes. And there it does knock the dot below the price right down there now. Here comes the close. Let's measure ourselves out now from the open of that candle there all the way down to there. That is 12.3 pips. And still going for 2% risk capital off our current balance of $9,760. There's our risk on screen now. And we're in. Hopefully that momentum hasn't gassed out and this can keep on going. Let's shimmy that stop loss right down to the bottom. It does have a good ways of moving. At the moment, it would be more likely that the EMA would turn against us after a few red candles rather than getting stopped out all the way down there. If it can breach this resistance level, that's where we'd be in a good chance of money. If it could get through this sort of area here, That'd be very nice, even if it has to consolidate before it makes the run. So immediately on the next period, the EMA is turned back down. This is very shaky, and this is something we've noticed over the last couple of days. So I'm not entirely sure whether to throw out the system of saying, hey, let's wait for it. I tell you what, we will close this trade on the basis that the EMA is turned against us. But if this EMA turns back up again before the parabolic dots switch, or before the stop loss would trigger on the parabolic dots, then we will scrap that rule for the rest of the day on the EMA, because it is a bit shady, very shady in fact. Price selling off a good bit more last period though, proving like the correct decision at the moment. The whipsaw we're getting on this 5-minute chart currently is very difficult to manage. It almost came down and triggered the stop loss down here, or the would-be stop loss. But then immediately bounced way back up, and suddenly it's looking like with another one of those green candles, it might turn the EMA again. Or maybe it will just come right back down. It's very difficult to know what's going on here. And there you go, you see the EMA suddenly ticks up now. Is it just a case that we will get back in around about the same spot we got in before? Let's pull that up. Yeah, I mean, we could just end up in the same thing again. Get up here, have a red candle come back down, and then immediately have to stop out again because of the EMA. And you can see here it is going to close upwards once again just a couple periods later. What we're going to do is we are going to take the trade, so we'll measure that out there. It's about 10.7 pips we'll go for. If the EMA turns down again, we're not going to take that as a signal to close this time. We have had enough of this EMA that's moved upwards, downwards, upwards, downwards. I think it's changed about 7, 8, 9 times in the last 2 hours. Risk on screen. Just in case anyone thought the 200 might do a little bit better, you can see it was still up. It came down a touch there before going back up again. There it comes down, up a little touch there, a bit more, back down, up again. So not a great amount of more consistency, even if we were using the 200 average, to be honest. Price coming down a bit now, and that moving average is tilting downwards as well. Even if it closes that way, we are going to ignore this particular signal and leave it all to our stop loss on the dots, because this average could just keep flip-flopping up and down. This period itself could change it from up to down, and we've seen multiple one-period changes over the last 20 or so. That is a very flat 90 period at EMA, last 3 or 4 periods staying dead straight. EMA now closing downwards, so that would be the signal for us to close the trade. Going to move our stop loss up here. So whether that makes any difference at all there, I mean, we'd be closing there versus here. It's a very minimal difference. Probably good to just let it run, see if it will come back up. And there goes the stop loss. So we did lose a little bit more. We could have closed off straight away with the EMA, but only a tiny bit of difference. If it closed like this 3 minutes, we will be right back in with a sell trade. And that's great news to get right back in a trade in the middle of this range. The system works. There's the close. So let's get into this sell trade. Exciting stuff. Hopefully get a trend here. We are getting in at the bottom of this support level here. Bit shaky as always with these parabolic dots, but hey, let's get in, see if we can win some of this money back. Call that about 12.9 pips. And there's the risk on screen now. Already we've missed a chunk of this move, just less than a minute into the candle. Good stuff. Let's get in. And there goes that stop loss up there. We'll probably see it trigger around about this area. Price will range now across this level. And then as these parabolic dots move in, eventually this will kind of shunt up a little bit and it will proc the stop loss, probably around about 1.25400 or so for a 1% loss thereabouts. Just ranging around above our price a little bit at the moment, not a lot going on. And it does trigger our stop loss there. That was at 407 after the range. This candle looked promising actually because it dropped down quite a bit and you can't see, but this put us ever so slightly in profit for just a second there. But it goes up and up and up and it does trigger that there. Hasn't flipped the dots or the EMA just yet, but that could be to come. It is another losing trade though. You can see all 3 of them and it's just over $100. So we are currently $388 down for the day. We'll plug on though. Hopefully this price cuts up through the dot there. This EMA turns and we get a buy signal to get us back in. Not looking promising though. Yikes. Has flipped the dots now, but not the moving average. That's still going downwards. If that gets upward, we get our buy. Currently needing a $630 winning trade to get us back into profit for the overall strategy. I feel it's coming. It's got to come. So the EMA has just closed with a single pixel upways there. It's just ever so slightly gone up, but that does mean that both of these trend indicators are giving us the go-ahead to get in the trade. So let's measure out our stop loss. 10.9 pips. Our risk is on screen now. And we are in once again. The buy trade is here. The moving average ticking up, looking a little bit flat again at the moment. Price coming quite heavily against us. The EMA has closed downwards, but because we're still inconclusive about whether it's better or not to actually just instantly close the trade again, we are going to let it run at that a little bit more. And so we'll ignore the EMA and we will go purely on the stop loss at the dots just to see how it goes. Because this period alone, we could have a green candle that mirrors this one from 2 periods ago, and this will tick back up by 1 pixel again. And then that will be 4 times on the bounce then that it's moved up and down by 1 pixel, which it is very close to doing now, the EMA tilting up once again just 2 periods later. Price coming a bit back down again. Just looking at the range of this total alleyway here, this is 0.14% there. Incredibly narrow, incredibly narrow. Price getting a wriggle on now. It is moving against us. And there's the stop loss. It didn't actually stop a loss, but it looks like it might be stopping more of a loss. And those dots flip over, which mean we are in a sell trade at the end of this 5-minute period, if this confirms like this. If we close that off, it would have been at the end of this one, so it would have been closed off here. Instead, we got tripped out round about there. So we certainly did deepen our loss by giving that one a try. So let's buckle up for the next one. This candle about to finish green, in fact, but we are still getting that sell signal there. Let's measure out our stop loss. Call it 7.8 pips. That is getting narrower as the range is just getting in quite a tight space here. There's our risk on screen now. Quite a lot of lots, to be fair, because of how narrow that is. Here we go. We are selling. Why not, hey? Price just been ranging. Did make a break for our stop loss there, but it's moved back a touch now. Still in a loss for us at the moment. And there, the price getting up. It does trigger our stop loss, and it knocks the dots there underneath with the EMA pointing upwards as well, clearly giving a buy indication. But I think 5 losing trades in a row, it is enough. No more trades. This has proven to be a bad day. Each of these days actually got successively worse, right? Had two winning trades on the first day, a bit more trending. Second day, 1 winning trade, less trending. And then today, yeah, look at this, very rangy. This is where we started. And all these 5-minute candles, you can see how it's been incredibly rangy. Doesn't look like it's going to break out. I think it will just pop back down eventually and then just trigger a loss again down here. And we are also closing in on a 10% total loss here for the 3 sessions. So in the space of those 3 days, quite a considerable amount of losses, even with a managed maximum 2% risk. A lot of people like it on the daily time frame, so I just wanted to pull that up here. We're on the pound Swissy still, and just see how we would be doing if we were trading this on the daily over the last 4 months or so. Let's change it to a 200 average here and just see if that's going to make us any more. Again, you're going to be in that buy trend. That's going to knock you out there eventually at 60.9 pips. This buy trade here, you get in straight away. And again, gonna stop loss there, 40.6 pips. Buy trade there. That's going to be a loss down there, 96.9 pips. And a buy trade there, also going to be a loss down there for just over 100 pips. And it goes on like this. It's just on the pound Swissy here. Back on the 5-minute chart quickly, we can just see that If we had got in this buy trade, it would be coming back down already, the price. Not too good. But we did get 15 trades out of the strategy across our 3 sessions, so let's round them up in the journal. Here is the final journal. Let's scroll down to today's trades. There they are, 5 straight losses. As we said, 2 gains on the first day, 1 gain yesterday, and then none today. It wasn't actually looking too bad after the first day, and then the second day was starting to show some cracks, and then the ranging today really showed issues with the strategy. And these are some major losses as well. A lot of trades we are able with the parabolic dots to limit that 2% risk by the fact that we're dragging it forward every period. But here, some of these were coming close. $174 there, and then $246 ones down there. As we said, almost 10% loss on the account in just 3 days and 15 trades. And that's with a system that is trying to keep it managed. Yeah, and there's not really a huge amount to say about today's trades. They were all fairly similar. It just kept getting you back in and back in. And you can tell that by the times here. Look, 11:15 we were out, 11:30 back in. 11:56 out, 12 o'clock back in. 1:50, 1:55 straight back in. Sometimes it just ranges for a couple periods before it gives you that signal and you go in again at the top of the range just to get stopped out. And you can see that commission building up as well. That's just under 10%. The red runs heavy for the parabolic dots. We do have more to say about it though in our final thoughts. Okay, last chance now to express my opinion on this strategy. I think based on the performance, you're right to presume that I'm not going to be kind to this one. It is possible that if we'd had 3 straight trending sessions that we could have got some nice trades, maybe a couple small losses here and there, but we could have ended profitable. However, that is not what we got here. Instead, we got a lot of whipsaw price range, which, to be fair, that is what the market does a lot of the time. But when it's in that range, neither the EMA or the parabolic stop and reverse know what to do. They are both far too uncertain. If these indicators were people, that is when they would be breaking down in sweats, not knowing which button to press. And where we have seen price stay about the same for 90 periods, that is where the EMA has flipped back and forth within single candles. That extreme level of uncertainty is unwanted, and it was not a rare occurrence. We did get some glimpses of what the indicators can do when the market does trend, and it seems there's a good chance of squeezing extra profits out of the trades in a true trending environment. But still though, in our experience here, those trades were not enough, nowhere near enough to get back the losses from when we were in the range. We briefly looked at changing it up for a more alleged consistency using a 200 period moving average or the daily time frame. Don't get me wrong, there is a good chance it's going to be an improvement on the 5-minute time frame using the 90 period average. But from when we looked at it on the pound Swissy, I can't see that changing either of those settings would actually result in consistent profitability over time. There was a lot of losses on that chart still. On that basis, therefore, I could not in good conscience recommend you waste your time with a moving average parabolic stop and reverse strategy. If you are going to use these indicators, then add a lot more on top of them to try and get some bulk confluence. Find a method of getting away from those ranges, even if it means not making regular trades. Because across these 3 sessions, I do think we were entering too many trades. In a trend hunting strategy, you can be sure there is something wrong when the system tells you to be in a trade going one direction, and then just a few periods later, it pulls that U-turn and says, actually, no, let's go the other way. You would lose trust in the decision-making process of a person who is making skittish decisions like that, and so it is no different with a rules-based strategy. The trust is lost. If you absolutely are desperate for more information, then you might find some in the description. One final word of warning is to remember that this strategy was traded with demo money. If you are enticed by the results from this strategy to take it live and bet your remaining credit card balance on getting trading gains, and I can't tell you what not to do with your borrowed money. Thank you for watching. This is Project Trade, and I am the man with the iron chart. There will be more.